Well, for banking sector in Q1 FY24, the net interest margin could be under pressure. So, loan growth has been pretty strong. The year-on-year loan growth has been around 15.5% and sequential loan growth has been approximately 2.5%. So, the net interest margin, which represents the difference between interest earned and interest expended, may face some pressure in the near term for many lenders by about 10 to 20 basis points. The outlook for net interest margin in the near term is expected to be negative. The cost of funds will impact the net interest margin for many banks. The incremental CD ratio, that is credit to deposit ratio, in the first quarter of FY24 has been around 66.5% when compared to around 93.6% in the same quarter last year. So, private banks have reported a strong pro forma business update indicating robust performance continuing over there. They are also gaining market share in the banking sector. Additionally, private banks are likely to invest in their franchise, which could lead to elevated OPEX or operating expenses. The asset quality of banking sector is expected to improve, primarily driven by the fact that slippages will be on the lower side and recovery will be better. So, this suggests that the banks are taking measures to manage their loan portfolios effectively. Now, credit cost, which refers to the expenses incurred by the banks in managing their credit risk, is expected to be lower or under control. For PSU banks, that is public sector banks, they are expected to continue witnessing a strong improvement in their profitability and return ratios. This suggests that PSU banks are experiencing positive developments and are making progress in enhancing their financial performance. Based on Kotak Securities estimate, State Bank of India's net interest income is expected to be up 24.4% YOY but down about 3.9% quarter on quarter, and net profit is expected to be up 175% YOY and almost flat on a sequential basis. For SDFC Bank on a standalone basis, Kotak Securities estimates NII growth of about 19.6% YOY and down about 0.2% sequentially, while they are expecting the net profit of SDFC Bank on a standalone basis to be up 23.7% YOY and a decline of 5.8% sequentially. For ICICI Bank, Kotak Securities estimates NII growth of about 31.4% YOY and a decline of 1.8% sequentially, while the profits are expected to be up 31.6% YOY and a decline of 0.4% sequentially. For Axis Bank, Kotak Securities estimates NII growth of 24.8% YOY and a decline of 0.2% sequentially, while they are expecting net profit of Axis Bank to be up 39.6% YOY. In the quarter of Q4 FY23, Axis Bank had reported a net loss on account of the merger of Citi's retail business. Back to you.